Alright, so the plan is once I get a 15-minute close above this down close candle, I will be looking for a long entry within this down close candle to attack 5150. On the 5 minutes, what I have is this huge down close candle here. This is a bullish order block that I can utilize. So within this order block, we have what do we have? We have this last down close candle here, but to be honest with you, I would like to see this swing high hold, which means price don't violate this swing high here, right? And if it does, then I'm not looking for buys anymore. The other thing is that I'm still waiting for this candle to complete. So in a case whereby we get eventually, right, let's just say if we get to the closing price below this level here, I will look to take out the lows at 930. Pretty simple here. So if that's the case, I'll be using this up close candle as my entry, the opening price or any prices above the up close candle as a short entry into 930 low. Right, so we'll see if this candle wants to close above this up close candle or not. Right, so I think the highest probability setup would be, let's see, from here my stops has to be below this order block. So from here to here, 50% and OTE, that would give me this daily opening price. At the same time, if ES is to retrace, it might want to retrace harder than NQ because it's not as bullish as NQ. Therefore, I think the safest entry would be below this swing low, and let's see on the 1 minute, which means here stops will be here, and what else, the last entry probably here, OTE range. But we'll have to see. If it closes like this below this up close candle, then I won't have my longs, and instead I will focus on shorts, which I would much prefer to short, right? And it's stated right at the beginning of the session here. So yeah, I much prefer to short into 930 slow and probably even lower. We'll see. I'm not sure if I would like to trust this as the bearish order block, right? So I think it's best for me to wait until 11:15 because ES is kind of like in a chop. Initially I tried to short this order block here due to SMT, but it failed. Instead ES made a higher high. So as you can see here, one touch of this bearish up close candle it retraced. So let's say if we get this 15 minutes close here, I think if it can't close above this level here, then I would love to look for shorts. Interesting. We have relative equal lows over here. I think if I'm shorting here, then this would be my low-hanging fruit objectives. Alright, if we don't get this entry here, then I'll have to look for the next green candle to be validated as a bearish order block. Yep, that's all. Very tough conditions here. Right, I like this speed here through the daily opening price. I like that. Very nice reaction of this bearish order block. Two-minute candle running 10 handles. Right, so we have here, this is the next objective, I believe. 15 minutes. I mean, price can definitely range around here, like let's just say for example tagging into this fair value gap to send the price higher. Total soup, right? So total soup, the range extremes, that could be possible as well, which is why I would prefer to wait for a 15 minutes close below this level here to validate me a short. The daily does look bullish, but whether or not we attack these areas today, that I'm not sure. And the other thing is that I'm not sure if I want to short below the daily opening price, you know. So there are lots of conflicting ideas here. So far, the AM session hasn't been that eventful with regards to my model, so I just got to be patient, and I hope that it doesn't drag into PM session for that beautiful move like yesterday. To me, this is like a scalper's paradise. I mean, the current market conditions. Hi, I am from Singapore. What about you? I think right now it would be best, like let's say for example, if we are going to continue higher, the best is that we get price tagging into this fair value gap here, and we have a 5 minutes change in the state of delivery after tagging this fair value gap. To go higher, then I would most probably entertain that idea. But the 15 minutes candle, I don't really want to see it closing below this low here if it is to tag inside this fair value gap. So I would prefer like a wick through, but the body closing is above this level here. First time watching my channel, yep, welcome. And for my channel, usually it's silence, tape reading, and waiting for setups to occur. The model that I use doesn't generate a lot of frequency in terms of trade ideas and setups. So I guess a lot of viewers usually get bored watching my live streams, especially on days like, for example, today. Great, then thanks for confirming. I don't want to be speaking to the wall while thinking that someone's hearing it. Lost in transaction. Yeah, but how did you find my channel, or what made you stay for this long? Because as I mentioned, usually viewers get bored. It's interesting that we have an inside candle right here, and for this particular candle it has decided to print a premium wick first after the opening price. And yeah, let's see if it expands lower for this candle. On the 5 minutes, I mean, we do have this fair value gap, but I'm not that interested in taking this trade here because it's pretty clear that we are in a consolidation, and usually for consolidations I would much prefer to wait. When you take a look at the higher time frames, we are actually bullish. The daily candle is closing above this down close candles here. Therefore, I am trying my best not to not to fight against the higher time frame order flow. Right, so even on the 4 hours, we are still bullish. We are making higher highs. The thing that I don't really like about this is that this 4-hour candle here is closing back within the range, and this candle here, it might want to close back within the range of the previous accumulation. So that is my concern. On the 1 hour time frame, yes, we are still bullish for now. Therefore, it's in my best interest not to fight against the current order flow, right? So even though I would prefer shorts, if it doesn't present the opportunity to do so, I'm not going to force my will on it. And initially I did took a trade. I tried to short here into this fair value gap here, but obviously it did not pan out. So this is one of the reasons why I don't want to make my second trade or utilize my, I wouldn't say the word utilize, but for my last bullet for the day, I don't want to trade against the higher time frame order flow. So yep, let's see how this goes. So far it's been quite a low range, small range consolidation for now. It's not lunch hour yet. Lunch hour is from 12 to 1:30. So that's the lunch hour. But we are approaching the lunch hour macro, as what ICT calls it. Is basically the macro between 11:50 to 12:10. So that's the lunch macro. But for me personally, that time frame is not that useful in my model. It's very useful if you are a scalper. Alright, so this is going to be an interesting case study here. If I'm trying to short the market and I see that price has traded into a 5 minutes bearish fair value gap, what I would do is I would go down to the 1 minute time frame and I'll wait for a 1 minute change in the state of delivery. At the same time, preferably I do not want to see any 1 minute candle per se trading above or closing above the consequent encroachment of this fair value gap, because that would make it very not very, but that would make it low probability. And especially if we get like a one candle movement like this, trading all the way from the low to the high, I mean that makes this fair value gap low probability. So as we can see here, reasons why I would prefer to wait for a shift or a change in the state of delivery before entering my shorts is this exact case right here, because having in mind that we are bullish on the higher time frames, I would much prefer to have more bias confirmation on the lower time frames. Yeah, so let's see if we do in fact get a change in the state of delivery on the 1 minute candle. So far it's looking like it's not going to provide that, and as you can see the 5 minutes candle here, if we can close above this fair value gap, this makes it a low probability fair value gap, right? So I mentioned it prior, I believe, that there are reasons why I wouldn't want to short this fair value gap into this lows right here, even though I'm anticipating a turtle swoop. Alright, so now we have a closing price above the fair value gap, right? This is not what you want to see if you are bearish. So on the 15 minutes, what can I see from here? Nothing. I don't see anything from here. All I'm waiting for is a close above this this down close candle, or at least a close above the consequent encroachment here. But personally, this is very hard to trade because there's no clear key levels that I can utilize for entries and stop loss placements to go higher. Right, so for today's objective, I think this price here is quite reasonable for the price to want to gravitate towards. Right, and let's see if that happens. However, if I really want to push it, I can actually key off this level here. So this 3 down close candles is the bullish order block. So what price is doing as it retraces into this is to offer entries for the smart money, right? So on 5 minutes, I would be waiting for example a shift in or a change in the state of delivery to the upside as what we have right here. This candle closing above this down close candle that took out this low here. So right now this has become a high probability inversion fair value gap, if you want to put it that way. And what I would do is I would use this entry here and my stops down here, targeting this level right here. This is what I would do. And if I really want to pinpoint that exact level, I would go down into the 1 minute and I'll look for any 1 minute stop hunts. Then I can refine my stop loss placement to this swing low here. Entry wise, I think this is the lowest that I can go. If I want to get a fill, of course, I can put it at the low of this volume imbalance if I want to, but it's very risky here in terms of fills, right? It might just trade down to this very point here and you won't get the fill. So for volume imbalances, I usually use the nearest highs and lows of that particular volume imbalance, right? So anyways, this is how my entry would be, and as you can see, the risk to reward is not even it's not even 2, so I'm risking a lot, right, in this trade here, which is what I don't like. Therefore, you won't be seeing me taking this trade over here. But this is just hypothetically how I would trade if the left side of the chart is cleaner than what it is currently now. Yep, that's pretty much it. Let's see if this plays out by 12:10. Right, so for the macro, usually it would spool the price to a certain direction. As of now, I think that it's going to spool the price higher, so we could get a parabolic price run into this level here during the macro. Right, so I'm gonna log out of this trade of it because I'm not gonna enter any more trades. I only have 20 minutes left for this session, so I'm gonna log out and I'm gonna open this position on the paper trading account, right, so that it is more significant in terms of experience, right? So right here, I'm gonna buy one here. This is paper trading, by the way. And then I'm gonna buy one more at this level here. Right, looking for this high here, right? So let's see. Maybe the price will take sell side liquidity and it reverses. You mean this sell side? Do you mean this sell side here? So you mean it's gonna take out this high and then reverse lower? That is possible as well, which is why I'm gonna throw my stops by managing this position here. So for example, if I'm gonna perform this trade here, this trade here requires a lot of babysitting because I'm not buying or opening long position at the lows of the current range. I am buying and longing it at the equilibrium of the range, example right here. So it would require a lot of babysitting, which is why I prefer not to. So as you can see right now, this price action here, alright, let me enter one more. Okay, personally, the 5 minutes candle should not close below this inversion fair value gap. Any closing prices below this inversion fair value gap, it makes this inversion fair value gap a low probability. And the fact that it has traded all the way through the inversion fair value gap, I don't like it. Personally, inversion fair value gaps are one of the strongest fair value gaps that you can find. Therefore, those that are high probability, you don't really see price trade through it, right? So for me, any closing prices below this 50% level here of this inversion fair value gap, I will cut this position here. Right, so this candle is a pass. It has closed above the consequent encroachment. So right now, if this is going to be a green up close candle, I would like to see it close above this down close candle. It doesn't look too good on a 1 minute as well. As you can see, green candles are not being respected in terms of like strength, right? And basically what you want to see in terms of shift or change in the state of delivery is that right now I want to have a 1 minute candle closing above this down close candle here. If it is unable to do so, then we are most likely bearish. But let's not get too deep on the lower time frames. All I need is the 5 minutes time frame. So let's see. The only thing that is, or that I like to see, is that right now this two down close candle was not able to take out this up close candle. So that is one positive signature that I want to see. And the next signature that I would be looking forward to is the next up close candle closing above these two down close candles here. Right, so this is the third down close candle, and it still has not traded below that green candle here. So this to me, because I'm long, it is a positive reaction for me, right? If I'm short, this is not something that I want to see. Alright, so we have 3 down close candle. Any green candles after this 3 down close candles, I want to see it close above this high, this candle's high. This is exactly what I want to see. So right now, the next thing that I want to see is that if price can close above this candle's high, and subsequently any down close candles should not close below this candle's low. We're going to have the 5 minutes closing soon in 30 seconds. So far, price is still respecting this 50% of this inversion fair value gap here, but notice how it wasn't able to trade above and close above the inversion fair value gap. That is a warning sign. So right now, because we have traded below this green candle here, it is probably coming for my stops. Right, so any closing prices below this low, I am going to cut my position. Right, and we got the close here, trading up into this. Right now this should act as resistance to go lower, taking out all this sell side. Right, let's remove this 5 minutes inversion if once we get a closing price below. Right, so let's just say if I'm a scalper, I'm gonna take a short here. My stop loss will be above this high here. Bidding position. Right, so right now I'm treating this as immediate rebalance. I want to see price aggressively run lower, closing below this up close candle here, into the sell side right down here. So take profits will be down here. This candle here is the last chance that I'm going to give for the candle to close below here, below this green candle. If this candle is unable to do so, low probability. Once it trades below this low here, for example, let's say if this candle manages to close below, I want to see speed. Alright, 3 more seconds. Okay, I'm gonna put my stops here. I don't want to see any candle trading back up into this level again, especially if, when this is 2 down close candle and this was the last chance that I give. Its refusal to run below this candle here makes this entire setup low probability. So as you can see right here, this to me it's low probability. The 1 minute is just trading within this down close candle here, and it is not closing below any, not any, but this particular green candle. At the same time, we are near to that daily opening price, so gyrating between the daily opening price just makes it unfavorable, because what you want to see is the daily open support the price going lower if it is to be bearish, and supporting the price going higher if it is to be bullish. So for example, this is what we have right here, over here, over here, and this right here is a mess. Yeah, so that's the reason why. Right now on the 5 minutes close, we do in fact have a closing price below this 50% of this inversion fair value gap. So this makes this fair value gap low probability, and right now I don't really see this as a bullish inversion to go higher. Right, so I'm going to remove this PD array because at this point in time it's useless to me. So next, what I would use is this fair value gap here. If price can close below, then we're probably going to see a candle retracement into this low here, and then drops immediately into the sell sides, and especially this 15 minutes fair value gap right here. Right, so let's see if it happens. So as you should have seen, my 15 minutes model, it's way more reliable than the 5 minutes chart here. It helps me filter out a lot of such scenarios here, which is quite a headache to me, right? Price is showing you neither it's going higher or lower, and it's just gyrating around this level here. It makes me sick, right? So in the past, this would throw me on tilt, right? It would tilt me, and then I'm gonna over leverage on lower time frames to get what I want, right? To take what I can from the markets with force and applying my will on it. So that is very unhealthy way of trading. Therefore, right now I've decided to just settle on the 15 minutes, and if the 15 minutes doesn't show me anything, then obviously I can't put any trades, and that really limits the amount of trades that I take and the quality of the trades that I take as well. So this is just one thing that maybe you would like to know. I'm not sure, and I mean viewers of my channel would like to know. And that is also one of the reasons why most of my live streams are boring, because I'm basically waiting for the 15 minutes, right? And it takes a longer time to paint the candles on the 15 minutes. Therefore, most won't really have the patience to wait for it. Right, so right now we're closing above the 50% again. So this is like, it's such a mess, right? I mean, if I were in this trade here, let me take a look at the, yeah, it's closing above the 50% again. So if I were to take this trade here, I would have reversed, and then if it eventually runs to my target here, I would be very, very frustrated with the price action, right? But if you just zoom out a little bit, we are clearly in a consolidation. So consolidation and ranging market conditions are usually not very optimal when you're trading fair value gaps or break in market structures and such. It is only those speed arrays are only useful. Low voice. Yeah, because I'm speaking quite softly here. Maybe I can put the mic closer to me. Yeah, so in arranging, I mean, what I've learned over my past experience is that ranging markets or ranging market profiles, utilizing market structure shifts and fair value gaps are not that efficient, especially when they are in the equilibrium of the current dealing range. Right, so this is the equilibrium down here. So it's not that efficient because price would more likely than not gyrate around the equilibrium until it is ready to move. So when you are in a consolidation profile, it's best to refrain from entering off such PD arrays, even though it may seem like a no-brainer, or it may seem like the model 2022, mentorship model 2022, right? It may seem like that, like for example right here, highs taken out, shifted bearish, and then this is your bearish fair value gap, and you're gonna short this area here, and then eventually it turns around and stops you up. So this is how you identify, or how I identify low probability fair value gaps or PD arrays, especially when it's coupled with time here. So So yeah, which is why the 15 minutes has come in very useful for me. And why I was preferring shorts is because, as you can see right here, this is the current dealing range that we are in, and we are nearer to the highs rather than the lows, which is why I was preferring shorts rather than longs. So it's the same concept, but because time is fractal, you can apply it on any time frame you want. What kind of fair value gap is this? Do you mean on the 5 minutes or on the 15 minutes? This 5 minutes fair value gap can be inferred two ways, right? So let's do the replay button. When price is right here, this fair value gap is a bearish fair value gap. So this is a CB. But when you see a closing candle above this supposed bearish fair value gap, in turn it's going to become an inversion fair value gap. So right now at this point in time, this is an inversion fair value gap that is going to use to send the price higher if order flow is bullish. Yep, so I hope that answers your question. Alright, anyways, I just noticed the time. It is past 12:10 and my session ends at 12:10. So for now, I'm going to end the session here. I'll continue next week, right? So I'm just going to do a summary of what has happened during this AM session, right? So right here, let me just, oh, I had to log it out first. So for that TopStep account, right now I am down minus 240 for today, and my account balance is 49,325. This is the 4th day of trading that TopStep combined challenge, right? So during the London session, I took a loss of 123, and with this total amount here subtracted by 123, that is 117. So I took a loss about 117 when I tried to short the market right here. So I'm gonna explain why I was trying to short the market here. Okay, so on the 5 minutes, we have SMT for this highs here when compared to Nasdaq. Okay, and this down close candle here was closing below this up close candle. So I took a short within this wick here. On the lower time frames, there is this 1 minute CB. So I entered off the CB on the lows, coupled with the daily opening price, because I was anticipating the daily opening price to be resistance, right? Natural resistance. And my target was this equal lows down here, which is also a 15 minutes fair value gap, and basically this lows as well. I mean, for me, it looks a little bit too clean. Therefore, I shorted this CB, and my stops is above this swing high. So I was watching the price, and we have a confirmation of change in the state of delivery right here. These two down close candles closing below these two up close candles, and from this moment onwards, I shifted my stops from here to here, this high, and then eventually we have another shift in the market structure with this candle here closing below this consecutive up close candles. So my stops basically went to this swing high here, and I was looking for price to gravitate lower, but eventually, as you can see, it reversed on me. So here is the business. Stopped out on this high, entered shorts right here, right? And this is the only one trade that I took for this entire AM session, right? As you can see right here. So with this, it pretty much confirms that I should stick to the 15 minutes time frame. Right? But anyways, this is a low risk sell to me, therefore I was willing to take it. Alright, but anyways, with this I'm going to end the session here, and we will continue next week, and I'm gonna sign out right now. I hope you have a great weekend ahead, and good luck trading for the next week. And yep, that's it. Thanks for watching, and thanks for liking the video.